What's up, everyone? It's Caddy with Money Vesting. So markets here closing in on a very strong footing in the month of July. July is now over, and all three indices were higher this month. So we've got lots to unpack because we've got unemployment numbers coming out later this week. We've got JOLTS and construction spending tomorrow, and of course we've got earnings to watch out for. Lots of companies are going to be reporting later this week. So hope you guys enjoy this video. Find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. And don't forget, today is literally the last day. So I think by the time this video gets uploaded, it's going to be like 10:30, 11 p.m. Eastern. So we'll literally have less than an hour if you want to take advantage of these discounts. So that 16% annual discount on the Discord, and of course the 50% off on the bundle, and of course the options course is also available. Coupon code LAUNCH if you want to take advantage of just the options course, and the bundle, which is all three courses in one single bundle. That's also 50% off if you want to take advantage of that as well. Again, like I said, this will go away and expire after midnight tonight. So you've got a couple hours to take advantage of both of these deals if you're interested in joining us. So S&P 500 up a little bit over 15 basis points, the Nasdaq up 21, the Dow Jones rallying over 100 points. We did see a little bit of a spike towards the end of the day, but almost 4,000 stocks here in the green, and of course advancing higher with about 2,100 stocks declining, with S&P 500 Nasdaq notching modest gains Monday, rising for fifth straight month. And we also talked about the market breadth because right now there's over 80% of S&P 500 stocks trading back above their 50-day moving average. If that number eclipses over 90%, then it will break a very strong fundamental technical barrier pretty much, and 92% of the times, right? 12 out of 13 times that's happened in the past, the markets are higher 1 year later on average by 17%, by a median gain of 14%. So those are some very significant statistics to better understand what could be in the front in the next 6 months, 12 months for the market. Of course, if we continue to see some good guidance and some good earnings from these companies, then it's possible that we continue on this uptrend without really seeing a technical breakdown, and that 21 EMA continues to validate and respect the overall price action. So stocks finished July on a positive note. The S&P 500 jumped 3.1% to notch its fifth consecutive positive month for the first time since its 7-month streak ending in August 2021. The tech-heavy Nasdaq also gained about 4.1%, registered its fifth straight winning month for the first time since April 2021, and the Dow added 3.4%. Last week, the index posted 13-day advance that matched its longest streak of gains going back as far as 1987. I believe that's 1897. I think that they definitely did mess that up. It's not 1987. I think it's 1897 because it was. I remember going over that's over 120 years worth of rally for the Dow, and we were almost on the verge of breaking it, but we didn't. Of course, that was very unfortunate. Now, Advisors Alliance Chris Zachary says, and I quote, earnings coming in not as bad as feared, and clearly that's a good thing for the market. Part of the reason the markets rallied this whole month is that in addition to the good news to the economy that we've seen all year, we're also seeing that corporate earnings really seem to have not been impacted as much as people have been concerned about. Now, there's going to be a little bit of pushback there. I do disagree. I mean, earnings have been impacted. They have been coming down. In fact, we are going to see the second quarter earnings decline on an S&P 500 year-over-year basis by about 7 to 9%. That's a pretty sizable decline. Like if you ask me, like if earnings were declining 7 to 9%, like that would have been pretty sizable. But the only difference is the market does not care. That's the difference. It's not that earnings were strong or not as bad as feared, because they still are. It's just that market doesn't care, right? Market doesn't give a single, you know what I mean. And that's probably because the Federal Reserve is coming to an end towards its hiking cycle. And that's really where the focus is. And the market's thinking, again, in the next 6 months, 12 months basis. Like we're not really cared about what the last quarter was like when it comes to earnings, right? That's the least of our concerns. The most concerning part for the market really is what the next 6 months and 12 months are going to look like. And when you look out 12 months, how many rate hikes do you really see? Maybe one, right? And then same thing when if I asked you the same thing, say March last year, right? 1 year ago, how many hikes do you really see in the next 12 months? You would have been like 7, 8, 10, 12 hikes, right? And that's the concerning part for the market, right? Because it's a forward-looking mechanism, right? Everybody's looking and projecting for the next 12 months, 6 months, 18 months. And then if you compare this to last year, the next 12 months obviously looked very uncertain. But if you compare that to now, there's a lot more certainty. There's still uncertainty around the recession aspect, but there is a lot more clarity with respect to interest rates. And that's really what's driving the markets, on this consistent rally. We're seeing the slow and steady gains. The markets continue to kind of grind higher. It's not that earnings were strong or not as bad as feared. I think the market has a lot more certainty regarding interest rates because we're very close to the end of this hiking cycle. Now, if they give good guidance, again, Amazon and Apple are going to report on Thursday. So if they give good guidance, we could see this bull market really continue to pick up speed and even see momentum heading into the fall and possibly maybe even at all-time highs. But I do have to point out that we are entering a very cyclical environment for the market. Like in terms of seasonality, August, September are not the best months because if you take a look at, let me just see if I can bring that up. So market seasonality, there's a very, very nice sort of link that basically goes over your gains, your seasonality gains, and this right here is going to be that. So if you come over, so we can only go back as far as 1950s, so this only goes back over 72 years. So if I do August over here, you'll notice that on average August is down 0.18%, and we've got 40 up years and 33 down years, right? So what is that probability? In 73 years, 33 are down years. So that's going to be about a 45%. So 45% of the times in August, based on the last 73 years worth of data, the markets are down on average by about 0.18%, which again is nothing to write home about. But when they are down, we are seeing some pretty brutal months. Like for example, 2015 down 6%, 2013 down 3.3, 2011 down 5.7, 2010 down 5.2. Those are pretty sizable drops, like on an aggregate basis. And even last year, August was down 3.8%. But again, last year we were seeing a bear market for S&P 500. Now, the worst month of the year is not August. It is, of course, September. So if you come over to September, we see an average return, a decline of 0.8%, and we only are up 32 times, and 41 years are down years. So if you do the math now, basically 41 divided by 73, we are seeing 56%. So almost more than half the times September is a down month from a seasonality standpoint. And of course, when it is down, those are some of the most brutal drops you'll see. Last year, almost 9%. The year before that, down 4.89%. The year before that, down 4%. So last 3 years, 2020, 2021, 2022, September, we were lower. So can 2023 actually break that trend? Of course, time will tell, but something to keep in mind because seasonality-wise, we are definitely heading into a couple months of volatility. Now, that's the bad news. The good news is that we are also entering the best time of the year, which is October, November, December. So Q4 of any year is usually the best time of the year for the markets, especially December. December is the best month for the market from a seasonality standpoint. Average gain 1.31%, and we have seen 54 years that have been higher and only 19 years that have been down. So again, if you do the math, the probability for us to see a gain is over 74%, right? 73% of the times, December month is higher. So those are some things to keep in mind because obviously it's going to play into that psychology. And of course, September, if it is brutal, people think that, oh, September is going to be a red month. I better get out before September. And that's what really sparks that selling pressure. And that's what leads to September being a brutal month to begin with. So again, it's kind of like a self-fulfilling prophecy here. So not enough evidence in price charts yet to justify turning cautious on stocks is what MKM Roth says. There's still plenty of extended stocks combined with the euphoric sentiment and overexposure in the near term. Bulls whack-a-mole the bears again. And that's really true. Every time the bears even peak out and start to see a little bit of a weakness in the price action, the bulls step in. We see a lot of price action, a lot of buying pressure, and the momentum just continues. But more positively for optimists, there is not enough technical evidence to shift the technical environment to one of caution. And that's only because the 21 moving average, the technicals continue to point in the right direction and they continue to move higher and higher, making higher highs, higher lows. So this right here was the market. So energy sector doing really well in the month of July. We have seen crude oil prices again higher. I feel like people are not talking about this enough. This is going to show up in the inflation print pretty soon. And there was a July crude oil was up 16%. So very, very incredible gain for crude, which most certainly, at least in my opinion, is going to affect gas prices because they were up a little bit close to 3% in the month of July. That's what I see here, which is the flat tax US retail gasoline futures. But of course, at the pump prices are going to be a little bit different. So don't sleep on this because this is definitely going to be affecting inflation. Overall, I would say energy again leading the way, technology a little bit higher, software applications higher, financials, credit services. We had consumer cyclicals, basic materials pushing up. Some sectors kind of struggling a little bit. So technology, more specifically big tech. We've got consumer defenses, you got healthcare, and of course diagnostics, research, a little bit of comm services also pulling back. So this right here, again, in the last 1 month though, all 11 sectors are green. Everything's been pushing higher. And coffee prices, oats prices, lean hog sugar, wheat, cotton, everything pushed up. We got silver, gold, and lumber prices pulling back. Bitcoin back under 30,000. Ether just a little bit under 1,900 as well. Unemployment numbers come out later this week, so don't forget the consensus right now is 3.6% at the moment for unemployment rate. That's going to be pegged exactly where we are at the moment. And non-farm payrolls expected at over 200,000 jobs added in the month of July. Again, this comes out on the first Friday of the month, so later this week. Participation rate at 62.6%. Manufacturing payrolls, again, a very, very important metric to better understand the state of the economy, the strength of the US economy. 5,000 jobs expected to be added in the month of July. And another really important metric is going to be both the JOLTS numbers, which are pegged at 9.65 million, which is a little bit lower than what the prior number was. And that's partly because, again, there's not a lot of companies hiring at the moment. There's more layoffs happening than there is hiring. And this right here, construction spending, also a very important metric for understanding the state of the US economy. And the consensus right now is going to be 0.6% month-over-month increase. Now, if this just starts kind of seeing that negative number, so like if this starts compressing, like meaning we're seeing negative numbers and construction spending is going down month-over-month, that is one of the first leading indicators to look into for a potential recession, because everything really starts with manufacturing and construction. So something that we will definitely be paying attention to when the time comes. So going over to the markets now, so talking a little bit about the S&P 500. Before we get there, Ether here, just again, starting to break down below 1835. So this right here was the longest time, a lot of consolidation. And unfortunately, we're starting to see a little bit of a breakdown for Ether below that level. And 1735, 1738 is going to be that next support level to watch for Ethereum. And of course, Bitcoin now trading under 29,000. So this right here again was the longest time, a lot of consolidation. It broke down, consolidated again. Support level is going to stay put at 28,300 now for Bitcoin. So going over to S&P 500 now. So again, continues to slowly and steadily drift higher, up over 15 basis points, almost getting up to 4,600. So this right here, of course, is going to be that target. That's the next resistance that we are watching for S&P. And we did see, pretty decent, I would say, this one of the red days, like intraday, we definitely saw a pretty significant red candle. This also had to do with, the Bank of Japan kind of being more flexible when it's yield curve control. And of course, a couple other catalysts with respect to the Federal Reserve coming in. So we did see a bit of a pullback. Didn't quite get down to that 21 EMA as we did in the past. But of course, that rally got bought up fairly quickly, and then we rallied back higher. 1% the following day, very nice dead cat bounce, and of course on the day today up over 15 basis points. So next resistance and target really is going to be 46.23, and of course we do have a lot of individual stocks, and not to mention the broad-based market continues to see momentum. So 81% of stocks in the S&P 500 are now trading back above their 50-day moving average. This definitely does represent a very broad-based rally, and of course we've seen a lot of sectors and stocks participate in this move higher. It hasn't just been big tech. Now, speaking of big tech, and more specifically tech, NASDAQ here up 21 basis points. So again, we did see a bit of a pullback and a dip here, down 3.3%. That's something that we were talking about, we were expecting, and of course, getting bought up here. Once again, the 21 EMA acting as a very strong support, and buyers stepping in. Resistance is going to stay put at closer to 14,600 for the NASDAQ moving forward. Talking a little bit about Apple here, and Apple on the day also pushing higher, up over 32 basis points. So just a very, very small gain on low volume. Resistance is going to stay put at 197, closer to 198. So that right there is going to be that resistance to pay attention to for Apple. And like I said, that 21 EMA continues to act as a very strong support. I've already done a video on Apple prior to the numbers coming out, so they are reporting earnings later today or later this week, so on Thursday. So definitely do check out that video if you have the time. Talking about Amazon, also pushing higher. They are also reporting along with Apple on Thursday. I've already done, actually, I haven't done a video on Amazon, so we'll be doing one very, very soon. Resistance is going to stay put at 136. So this right here is going to be that level to watch for Amazon moving forward. Talking about Tesla here, Tesla also just consolidating sideways, a very, very small gain on a very low volume. So resistance is going to stay put at closer to 275, 276, something that we have already talked about for Tesla, and resistance all the way up to $312 per share, with the support sitting roughly at 240 for Tesla. So that's going to be that support, technical support, resistance 275. Now, I actually got a comment from one of the other videos that I did on a stock analysis, and that comment was something like, every stock that Caddy analyzes is expensive, is overvalued, right? Every stock that Caddy analyzes needs to come down 30, 40, 50%, so it's just not even worth looking at it. Or another comment was, Caddy, you're bringing us stocks, that's great, you're doing the analysis, but you're talking about stocks that are already overvalued. Why don't you talk about companies that are trading at fair value? So there's a couple different ways that I want to address those questions. Number one, if you take a look at the market as a whole, right, on aggregate, we have rallied over 30% just for the NASDAQ. S&P is up over 20%. Not to mention a lot of individual stocks are up 30, 40, 50, 70, 80, even 100 and 200%. So there's absolutely no doubt that the stocks that we analyze are going to be expensive, and they are going to be trading at a much higher valuation compared to 9 months ago or 12 months ago. And that wasn't the case back in October, right? So if you go back, watch my videos, I remember doing these specific videos. The markets, this is a very rare occurrence for the markets to be trading where they are. This is absolutely comical how low the valuations have gotten down to. Like, those were the titles. Those were what we were talking about. So that wasn't the case back in October, right? So it's a constant evaluation of where we are. And yes, right now it may seem like every stock we analyze is trading at a really expensive price, because it is true. Because I'm not making these things up, guys. Like, you can look at the valuations, right? You can look at the price to earnings, price to sales. You can do some comps analysis, look at one stock versus another, and you can kind of get a better understanding of why we need them to drop in order for us to be buyers of those companies. There's a couple stocks that I believe are good value, like Enphase, for example, right, is already trading at my fair value, 144 I think was it, and right now it's at 151. So I'm not making that argument for Enphase, right? So just because I'm talking about other stocks, let's say for example Nvidia or any other company for that matter. So we talked about, I think, did a couple videos, right? So Visa, for example, or Adobe, for example, right, might be trading at a higher valuation, but that doesn't change my analysis on Enphase, right? Because it's two different companies, two different valuations, two different fair values. So that's what I wanted to mention. And then when it comes to the other question, you guys, bring me companies, right? I mean, it's a collaborative effort, right? It's definitely a collaborative research effort. So if you have any companies in mind that might be trading at fair value, that you believe that, okay, we can do some analysis on this company, we can do some due diligence, we can look into this company a little bit more in depth, and it might be trading at fair value, I'm all ears. I'm always open to new opportunities, especially if it's like an underrated stock. People don't know about it yet, right? Institution's not there yet. That's where, there's going to be potentially opportunity, because if it's profitable, if it's consistent, if the management's good, the product's good, we do the qualitative analysis, if it meets off all of our checkpoints, and of course the fundamentals line up with some good, solid potential, growth potential, and the valuation's low, I'm all ears. Bring them to me. I'll analyze it for you. So that's something I wanted to address, because I know that right now the market isn't giving us a lot of deals, but that's where patience comes in. That's where discipline comes in. That's where you not FOMOing in, even though I have a couple times FOMOed on Enphase, so I am guilty of that. But that's where a lot of these things come in. That's where you can observe the markets, check the temperature, see where we are in that pendulum, right? Because we're constantly swinging from undervalued, overvalued, undervalued, overvalued, and kind of understand, okay, where are we at this moment? And then kind of assess the risk and reward, and see if it makes sense for you. There's no right or wrong answer. Like I said, what I'm doing may not be the right thing for you to do. What you're doing may not be the right thing for me to do. So it's all depending on what your perspective is, what your goals are, what your financial objectives are, what your risk tolerance is, what your liquidity needs are, what your age is. There's a lot that goes into it. So anyway, going over to Nvidia now. So Nvidia on the day flat, so really it's not going anywhere. Resistance is going to stay put at close to $480. Support level close to 439, close to 440. Lots of consolidation. So we've already talked about Nvidia being a little bit more expensive, 40 times, 44 times sales, very high. This right here is going to be that downtrending channel, so lower highs and lower low. So support level is going to stay put at roughly around 106. $105 per share. Resistance obviously is going to stay put roughly at around here, and my fair value in the low 80s for advanced micro devices. Talking about PayPal, and PayPal actually did really well today, up a little bit over 2.49%, so definitely outperforming a lot of individual stocks and of course the markets as well. Did a video on PayPal over the weekend, and PayPal, again, PayPal and Enphase, right? Two companies, PayPal also not overvalued, right? Not trading at a higher expensive valuation. In fact, if anything, it is trading at fair value or close to its fair value. So there is a difference in our analysis. It's not the same for every stock because every stock, every company is different. The market environment has shifted quite considerably if you compare to it like 9 months ago, 12 months ago. So that's what we have to analyze, right? And it all depends on, where we are in this market cycle. So PayPal here, $75, $76, getting a very nice breakout above its 200 simple moving average. Next target and resistance is going to be 77. So this right here is going to be that level to watch for PayPal, kind of in line with that 300 SMA and of course that higher high as well. Square, on the other hand, was also pushing higher back over $80, and we are approaching that resistance. So Square actually might end up making a good trade idea from a short perspective, considering the overbought levels, the negative divergence, and of course not to mention the resistance level that we are approaching and the insane rally that we've seen for Square. So keep in mind that Square is going to be a potential idea, which I will share in our Discord when the time comes with proper risk analysis. But yeah, definitely very, very strong move to the upside. Talking a little bit about Meta platforms now, and Meta on the day, again, starting to pull back a little bit. That 21 EMA continues to act as a support. That level is going to be at $301. Resistance all the way up to as much as $348 for Meta at the moment. It has obviously done really well, consistent uptrend, moving above its 21 moving average. Netflix here bouncing right back up. So this right here was that support that we talked about at close to 409, 410. And of course, we're now starting to see a little bit of a breakout past that 21 EMA. Resistance is going to stay put at close to $458 per share for Netflix. And like I said, support level is going to stay put at 411. Google, on the other hand, also continues to move sideways. So very, very flat day, up just over 8 basis points. Support level is going to stay put at 131, 132, all the way down to 127. Of course, next target and resistance is going to be at $144 for Google moving forward. Finally, we've got Microsoft, Shopify, and Enphase. Microsoft here continues to struggle a little bit, trading below its 21 EMA. So that's a pretty big breakdown. Of course, we saw a big sell-off, 2% on Thursday. Support level is going to stay put at 322, all the way down to as low as 312, down to as low as $292 for Microsoft as well. Talking a little bit about Shopify, and Shopify here also up over 2.3%, so getting a lot of momentum, and they are going to be reporting earnings later this week. I did a video on Shopify as well, so make sure that you do check that out. Support level is going to stay put at roughly $66, $67, all the way up to resistance at $75 per share. And finally, we got Enphase just selling off a little bit, down over 1.6%, so underperforming the market. Support level is going to stay put at 151, so this right here is going to be that level to watch. If you do see a breakdown below this, and if you do see that selling pressure kind of accelerate, this right here is going to be my good deal area for Enphase that I will be waiting patiently for in a disciplined manner for Enphase to come down to, so I can actually make a dent in my average cost basis. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget, we've got the bundle, the 3 courses available for literally half the price, 50% off, and this expires in the next couple hours. So after midnight tonight, it's going to be gone. And of course, the option scores individually, you can purchase 50% off, coupon code launch, and the Discord also 16% annual discount available till the end of this month. As always, happy investing. I'll see you all in the next video.